USTEC 100, popularly known as the NASDAQ. And we have quite an interesting situation going on right now, as you will see that price action since the Asian session beginning to find selling pressure, resulting in price action breaking down our key level for the week at the 17,650 to set a bearish tone for the first half of the week. Now, let's run through what really happened during our live session yesterday and what we saw and said we will be using to guide our decisions going forward. Now, during our live session yesterday, the first thing we did observe was that price action was trading above our key level at the $17,650 area. And following the fact that price remained above the key level, we saw here how price action was initially confined within that range between the 17,745 and the 17,670 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we have a range like this, we usually exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with our orders placed at both ends, we initially had our buy stop order triggered at the break of the 17,745, and of course that position did not do very well as we saw price drop to the downside, taking us out of that first buy position in a loss, and went ahead to trigger our first sell position for the week at the breakdown of the 17,670. We also saw the breakdown of the 17,650, giving us two sell positions for the week. And interesting enough, if you had missed out on the first breakdown, we saw how the market came back to retest structure and then the momentum continued to the downside. Now, for those of us who capitalized on this opportunity, well done and kudos to you for being on standby, as you currently should be having a minimum of two sell positions running in profit at this point in time. So the first position here is running with about 93 pips in profit, while the second position is running with about 70 pips. So we have roughly over 150 pips in profit, which is not bad to start the week with. So at this point in time, I'm going to be encouraging you to move all stop losses to somewhere around our key level to secure this current sell position, as we never can tell. Anything could happen as market participant anticipates the reopening of the US session today. Now, with a well-secured position at this juncture, what is going to be our plans for today? Will this bearish momentum continue to push further to the downside, or is this going to turn out to be a false breakdown that will incite and become a platform for new highs? Now, before we go into the details here, let's run through our daily time frame just to have an holistic perspective into what is going on in this market. Now, during our live session yesterday, we took into consideration the nature of price action since the month of November. That's an historical data of about 4 months, I think. Yes, 4 months to be precise. And during the course of the 4 months, we can see price action had uniformly and consistently found higher highs and higher lows. And when we connected all the pivot lows here, we have a beautiful ascending trend line to work with. Now, in addition to this trend line, were a couple of levels here. The most important one, which is our key level, situated at the 17,650, a zone which had played a major role in determining the direction of price action in the last 3 to 4 weeks. Look at how this level was initially a selling niche during the last week of the month of January, selling niche around here. And during the beginning of this month, we saw the breakout of the structure. And in fact, for the first 2 weeks, this level had been a strong buying niche. And before we finally saw price break down the structure at the beginning of the week. So we had the breakdown of both the ascending trend line, which happens to be the first time price will be breaking down the ascending trend line, and of course our key level had a 17,650. Now, with the situation we have here, remember what I said here yesterday, that we are at a crucial juncture where both our key level had the 17,650 shares a confluence with that ascending trend line, and that if price breaks down both of the structure, it will be a beautiful signal for us to join a bearish move to the downside. And as it is right now, we remember we are already in a sell position with the hope that price may continue to find lower lows at this point in time. Now, we cannot ignore the fact that price action is at an all-time high. Remember, price tested the $18,050 area last week Monday. That was the first time price will be getting into the zone. And from a psychological perspective, we do know that when price finds a new high, it usually takes an extended period of time before market participants acclimatize to this area. Now, due to this and out of fear of a crash from this area, those who had bought this asset prior to price getting into this level may want to start taking some profit off the chart out of fear that price may crash anytime soon. So as a result of this expectation, we usually see price action evolve into choppy market conditions, retracement phase, and consolidation phase. And this has been what's going on here in the last couple of weeks. And now, with the way things are going right now and the inability of buyers to even come close to the previous high here, we may likely be seeing a reversal setup gradually unfold on our chart, where the neckline of that reversal pattern interestingly shares a confluence with that key level had a 17,650, where we will need a breakdown of this neckline area to validate the potency of that reversal pattern. So you would agree with me that we are at a crucial juncture in this market. Now, with this information we have gathered here, let's scale back down into the 1 hour time frame where we will be seeing things more clearly. So this morning, while I was dissecting this current market structure, I added another level at the 17,610 area to maximize the potential of this bearish moves, because as at the time I was analyzing this, that level was the lowest point where I was noticing buy pressure here, and since price broke down the structure, it triggered my thought position on this particular asset. And if in any way you had identified the setup, that is tremendously wonderful for you. Well done. Secure your positions right now and let's see how far this momentum will go. Now, with the way things are going right now and for the fact that price still remains below our key level, we shall continue to maintain a bearish bias. Now, for those of us who missed out on this breakdown, well, let's wait and see if the market will come back and retest the structure to give us more opportunity to sell. So we shall be looking out for something like this, and if we notice selling pressure on our 15 minutes time frame, we shall be joining more selling opportunities in this market. Now, to make things easy for us to be able to monitor this trade, let's acknowledge this descending trend line here. So if you look at the structure, bringing out my line chart, you will see that we have something like this right here. Hold on a second. So we have something like this. So we have, let me extend this out a little bit and then bring back our candle chart so we can do some little adjustment to emphasize the strength of the sellers here since last week Friday. So I would like to thicken this one a little bit, as this is going to be serving as the major descending trend line, where the lighter one will be serving as the temporary trend line at this point. So now, with a descending trend line in place, you know how we use our descending trend lines in this community. As long as price remains below this descending trend line, we have no business buying, as we shall continue to look out for patterns and structures that support the idea of selling. So Even if we see buy pressure resume, remember this trend line here could still be a barrier for buyers, and look at how beautifully it shares a confluence with our key level at the 17,650, and if continued selling pressure happens around that area, it could incite more selling opportunities here. So let's put this in mind while we continue to monitor price action. Now, in as much as we expect some bearish momentum in this market, we cannot ignore the potential that buyers could come in. And if buyers are going to be coming in here, what are the conditions that will make us feel comfortable buying this asset? Well, the first and first here is the need to see price break out of the key level, which interestingly would also have broken out of this descending trend line. And in fact, if price breaks out of this descending trend line, it will be a clear signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, hereby giving us opportunities to join an uptrend move from there. So the only condition that will make us buy this asset is for price to break out and retest both the descending trend line and the 17,650 for any opportunities to buy here. Unless this happens, we are not going to be considering buying here, as everything is looking bearish at this point. So this is my simple view on this asset for today. I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section.